Hi there, welcome back. Good to have you back on Market Fatafat. Let's keep it going with all the stocks. And now joining us on the technicals is Chandan Taparia, Derivatives and Technical Analyst at Motilal Oswal. And once again, Ria is joining us from the research team. Chandan, thank you so much for joining us, taking the time out and speaking to us today. You've picked out Indian Hotels as your first stock on the technicals. Now, just on a year-to-date basis, this stock has rallied 60% itself. So are you seeing some more upside on this front? Do you think it's time to hit the brakes on this stock, and what are the levels that you're spotting?
Good afternoon. Thanks for having me. So one of the strongest counter in the market, rallied by around 58-60% in this calendar year. It has recently given a breakout above 670 zone, and today the momentum is supported by build-up of long position, which clearly indicates that up move could continue. We have seen activity in the derivative side as put writing is visible along with the call unwinding, and classical breakout on the technical chart clearly indicates for the fresh leg of rally. So one can hold the long position or can add more with support of 680, and we are expecting the momentum to extend to a 730 zone. So one can look for further 4 to 5% momentum in the counter on immediate basis.
Thanks for that view coming in, Chandan. Let's talk about another buzzer today, and that is IREDA. Now, the company has said that it has inked initial pacts with SJVN and GMR Energy for the development and implementation of the 900 megawatt Upper Karnali hydroelectric project in Nepal. Now, this collaboration aims to enhance regional energy security through the development of renewable energy infra, and the project holds strategic importance for the company as it will help harness Nepal's vast hydropower potential while reinforcing IREDA's dedication to renewable energy development. This is what the company has said in an exchange filing. Positive news flow coming in for the company, and also for the stock. The stock is up almost 4.5% as we speak.
All right, moving on to Dixon Technologies, that is in focus today. In fact, in the morning trade, it was trading with gains of over 1%. After the company's wholly owned subsidiary, Paget Electronics has entered into an MOU with the HP India sales for manufacturing electronic gadgets. Now, under this agreement, Paget Electronics will manufacture notebooks, desktops and all-in-one PCs subject to signing of the definitive agreement in due course. On the back of this contract, Dixon Technology is in focus today. It has given up those morning gains, but nonetheless it is trading with gains of 0.8% right now.
Alright, so that's why Dixon is under the spotlight. But Ria, you've picked out Zaggle for us. Tell us what's the news flow when it comes to this stock.
Yes, well, Zaggle is up almost 6% today after the company has entered into an agreement with HDFC Ergo General Insurance Company, and they are going to provide the Zaggle Propel reward platform to the company for the channel rewards and recognition, and this agreement shall continue until August of 2025. Now, Propel is a key business segment for the company, and it contributed almost 54% to the FY24 revenue, and the segment revenue also jumped more than 17% year on year in FY25. So we're definitely keeping an eye out on Zaggle.
All right, moving on from Zaggle to DBS Labs. Chandan, you had picked out DBS Labs, a pharma name, and in fact the entire pharma pack has been in its heydays right now. Tell us what are you seeing on DBS for this one, and DBS being one of the top picks for the techies.
Yeah, so Nifty Pharma is holding well, has been making high tops, high bottom, and DBS Lab is one of the strongest counter. I think small follow-up can lead it to the new high. As of now, it's struggling near its 2021 high of 5425 marks. If I look at the data setup, it has seen the open interest addition of more than 20-25%, with surge in the trading volume, which it clearly indicates fresh leg of rally in the counter. So one can buy with support of 5240, and DBS has all potential to climb towards 5650 marks.
Okay, so that's the view coming in on DBS Lab, but let's discuss in further detail the AMFI data that we have seen now and the SIP data that we will be getting in a few minutes from now. Joining us on the show is Anthony Heredia, the Managing Director and CEO at Mahindra Manulife Investment Management. Anthony, thank you so much for joining us on the show. Now, first up, give us a sense of what you are making of this AMFI data that we've seen, because everything looks good. The only pressure point, if we could call it that, is the total inflow figure has slightly reduced on a month-on-month basis. So help us understand why this has happened, and also the potential impact, if any, and what sense are you making of this?
Hi, thanks. No, so I don't think there's a material change in inflows. Typically in July, you would see higher than usual inflows because a lot of the liquid fund money that gets taken off the table in June typically comes back at the start of the quarter, right? So you'll typically see higher inflow months in the months of July, October, and so on and so forth. So if I look at it broadly, other than those institutional type inflows in liquid, I think it's pretty much status quo.
Hi Anthony, this is Ankita also joining in. Tell us, Anthony, this time mid-cap and small-cap schemes have regained flows after 3 months. Now, see, up until now, the shift of investment trends has been towards the flexi, multi and the thematic funds, over small and mid-cap. Do you see this trend continuing? Do you see this move sustaining for mid-cap and small caps?
No, I personally don't. I have seen I think there are two ways to look at it. One is what is the share of gross flows? Because sometimes net flows can be distorted by a percentage of redemption that is typically lower than normal. Uh, to my mind, I'm seeing for the last few months a clear trend towards large and mid cap, flexi cap, and multi cap. I'm also seeing significant appetite for thematic funds, and particularly given that there are a lot of NFOs in that space. And I would want to use this opportunity to kind of caution investors. I think the best thing to do at this level of the markets is to be diversified in products that are across capitalization. So I don't see small and mid caps gaining further ground from here. But I do see increasing appetite for thematic funds and NFOs. And the point is that if you buy 5 or 6 different thematic funds, you're back to being diversified. So you might as well keep it simple.
So on that note, Anthony, also tell us what you are expecting to see on the SIP front, because we're penciling in a number of roughly 23,500 crores, and if you take a look at July also, we were at 23,332 crores. So what's your forecast, because we're going to be getting this data in a short while, but what are you penciling in on the SIP front?
So I would pencil in reasonably the same level of numbers, around 23,500. There will always be months where the delta for the SIP number doesn't change, but I think my prognosis for SIPs longer term continues to be positive. My view is SIP numbers will grow at 1.5 times the growth of the overall industry in equity and hybrid. So I wouldn't be surprised if we start to see 30,000 crores per month by the time this financial year is over, because there's a very strong appetite from retail investors towards this product. And secondly, I think given where market valuations are, a lot of people are looking at SIP as a more sensible route of investing in any case, right? So my broader view on SIPs is the number would be, I think, in the range of 23 and a half, 24,000. But I think the medium to long-term trend is extremely positive from my perspective.
All right, Anthony, thank you so much for joining us. Thank you so much for joining us and weighing in on the AMFI data. We will let you go on that note. But we'll come back to you, Chandan. You have picked out Bharti Airtel for us, that stock that is in focus. I think it was in focus yesterday also. But tell us, what are you seeing on the charts for this one, on this particular, for this counter?
So Bharti Airtel has a positive trend on the weekly and the monthly scale. In daily chart, after the consolidative and corrective move of last 6 days, again, it is at the verge of fresh breakout. We have seen a corrective move from 1605 to 1525, but from last 2 days, it has been forming the perfect bullish candle with perfect real body. That means Morubozu kind of pattern. Looking at the derivatives data, we have seen short covering with call unwinding, and the put writing also indicate the positive stance. Selective telecom counter are in focus. So all these are the reason that we are positive on the counter. One can buy with support of 1550. Bharti has potential to scale up to our 1650 to 1700 zone.
Coming in on Bharti Airtel, but before we slip into a short break, let's quickly address the SIP inflow data, and we just missed Anthony on that part, but he also had predicted a number around 23,500, and that's the level that we've got at 23,547 crores is the SIP inflow. This time it's at a record high level yet again, and monthly SIP has also crossed the 23,000 crore mark for the second time in a row as well. So that's what we're getting in as of now this minute for the SIP. So we'll tell you more about it right on the other side of this short break. Hi there, welcome back on Market Fatafat. Let's talk about the next stock in focus now, and that is TCS. The company has entered into a strategic partnership with the Mansfield Building Society in the UK to digitally transform its business. TCS will deploy its state-of-the-art digital banking solution for core banking, along with its digital home lending solution to enhance member and intermediary experiences and support Mansfield's growth plans as well. In a press release, the company said that TCS Bank's STM for core banking will accelerate the building society's digital transformation, and TCS digital home lending solution will streamline the mortgage value chain from application to completion and beyond, ensuring that Mansfield Building Society remains customer-centric, operationally resilient and future-ready and compliant as well. So that's the news flow coming in on TCS, and very smart moves coming in on this Nifty 50 major as well. Almost 2% higher is where TCS is as of now.
Absolutely. In fact, keeping with the IT pack, then the entire IT pack is in focus. In fact, the note by Motilal Oswal that has, that is saying that it is time for a turnaround for the entire IT pack. And on the back of that, look at the Nifty top gainers: LTI Mindtree, Wipro, HCL Tech, Tech Mahindra, Infosys, and TCS. Also, they are maintaining a buy, and they've hiked the target price to 5,400. On Infosys, they're maintaining a buy, and they've hiked the target price to 2,200 rupees. HCL Tech, they're maintaining a buy and hiked the target price to 2,200 rupees. On Tech Mahindra, they've maintained a neutral, but they have hiked the target price to 1,600 rupees. Now, they could be, on the cusp of recovery after enduring a prolonged period of discretionary spending cuts that, these companies have witnessed. Their top picks from the pack are HCL Tech, LTI Mindtree, and Persistent, but they estimate that HCL is likely to lead revenue growth and are among the large caps over the next 3 years that is likely to grow. And also a positive outlook on LTI Mindtree that is based on a best-in-class offering in data and the ERP modernization with the recovery in the US banks' discretionary spending. And also on Coforge, they can leverage the synergies from Signity, and while healthy growth is executable order bodes well for the for the core business. So on the back of that, this entire IT pack is in focus today. In fact, Coforge is trading with gains of 5%, HCL Tech is up 2%. So entire IT pack is buzzing away in trade on the back of this note by Motilal Oswal.
Absolutely. So IT is in focus, and keeping it with IT, Chandan, you've picked out Coforge, which is one of your picks from the IT sector. Now, if you take a look at the entire sector, like Ankita pointed out, even in the month of August, this was a top performing sector. So tell us, do you think that this momentum that IT has seen will also trickle into Coforge, and Coforge will also be able to participate in the gains that IT is seeing, and what are the levels that you're spotting?
Yeah, so we came out with the report on the technology, a thematic bounce back and charting the path to revival for IT service. Already from last couple of months, we are positive on the Nifty IT segment based on the relative rotation graph that IT is one sector where strength and momentum both are visible. Now talking about Coforge, first I'll talk about the fundamental update. We have recommended change and upgrade to buy, and overall fundamental target for long term is coming at 8100 zone, with the view that company has exposure to BFSI, and that should enable it to participate in demand recovery, and a strong TCV and order backlog could see the positive growth outlook. But talking about technical setup, one of the strongest counter, making high tops, high bottom on the daily and the weekly chart. Also, it completed a rounding pattern which indicates positive momentum. So looking at the chart setup with support of 6600, Coforge has potential to extend the move to a 7200 to 7400 zone.
Moving on from Coforge to another IT name, Infosys, that is buzzing on the back of Motilal Oswal's note, and also another news flow that's coming on the counter. Tell us, Ria, what is the other news flow?
Yes, well, so on Infosys and Proximus Group have actually strengthened their strategic collaboration to help unlock new business opportunities. And this new collaboration is going to focus on a joint go-to-market approach that will leverage Proximus's expertise in CPaaS and DI solutions. And this combined with Infosys digital services will drive innovation in omni-channel customer engagement and AI-driven digital assistance for their joint customers. The collaboration is also going to help enhance digital security by providing robust DI and fraud protection services. So on the back of this news, Infosys is up around 1.5% today.
Right, Infosys in focus as of now, but you know what, let's take a break from all the IT stocks we were talking about. Shift focus to consumption, and let's talk about Marico now on the back of a brokerage note by Goldman Sachs. They've maintained their buy rating with a target price of 715 rupees per equity share, and they've reiterated the expectation of growing the India business in double digits starting FY25. Foods and premium personal care business to grow 2x in the next 3 years is what Goldman Sachs is penciling in when it comes to Marico. They're also saying that the branded FMCG industry is seeing a gradual recovery in the overall demand trends, and that could also pan well for Marico going ahead. So positive note coming in from Goldman Sachs for Marico, maintained a buy rating, target price at 715 rupees per share, stock up 1%.
Alright, Chandan, coming to you, Jubilant FoodWorks is the name that you have picked out for us. Good returns in the last 6 months, 50-odd%. In the last 1 month, it has been a little, a little tempered though. But tell us, what are you seeing on the charts for Jubilant?
Yeah, so good return and tempted price pattern indicates that positive momentum could continue. Already we have seen good recovery in last 6 months. The stock has rallied well from 430 to 670 zone, and now it's all set for the next leg of rally after a consolidative move of last 20 days. Today's price behavior is something which indicates the fresh leg of rally. So one can buy or can hold the long position with support of 650, and we are expecting Jubilant Food to scale up to our 700 to 720 marks.
Alright, that's Jubilant FoodWorks. But moving on to Tata Motors, that is in focus today. This news came in today during the market hours that they've cut the prices of e-vehicles, Tiago, Punch, and Nexon. In fact, Nexon's price cut has been up to 3 lakh rupees, whereas Punch price cut has, they've cut the price by up to 1,20,000 rupees, and for Tiago, the price cut has been by up to 40,000 rupees. The low prices of 3 vehicles is valid till October 31st, and that's the word coming in on the price cuts on the EV models for Tata Motors. Currently, the stock is absolutely flat. We did see that a bit of a spike, when the news came out, but right now it has given up those gains and it is trading absolutely flat. It's just in the green and it's just trading with gains of 0.01%.
Okay, so that's the reason why Tata Motors is in focus, but also on the sidelines of the CM annual convention. Sumit Chaturvedi, my colleague, caught up with Girish Wagh, the executive director of Tata Motors, on his expectation on how demand will shape up going ahead. Let's go across and listen into what he had to say about the company's growth roadmap.
We expect that I think H2 and maybe starting from September, which is the beginning of the festive season, the demand should start picking up again. And we will be in a good position with growth YOY in H2, which should lead to the final year at around flat with respect to the last year.
So talking about now, going forward, what is the outlook overall? New launches you're bringing, what category of tonnage you will be getting the new vehicles in?
I think we continue to launch products and variants across the range, and generally in a year, we launch more than 150 variants. So I think we will keep the same trajectory in terms of number of launches this year also. But within that, I think we have now also been introducing electric vehicles, and we have also been introducing alternate fuel vehicles, that is CNG and LNG. So I think we have been introducing spate of technologies across, and we'll continue to launch quite a few products.
And talking about the prices, so on as far as vehicles are concerned, are you feeling any price pressure of inputs? If yes, what is the outlook for prices as far as commercial vehicles are concerned?
So I think the pricing for commercial vehicles in this year has remained stable. There is also good pricing discipline in the market. As far as input pressure is concerned, I think there are some commodities which are inching up, some commodities which are correcting. So on a net basis for commercial vehicles, I think one is seeing a flat kind of commodity outlook.
All right, moving on to a banking name, Axis Bank. Chandan, you picked out this counter which hasn't really done anything in the last 6 months. Hardly any moves, just in 8% up move. But tell us, is it time that this counter started moving now?
So Bank Nifty itself is underperforming the broader market, and Bank Nifty is 2,000 points away from its lifetime high of 53,357, and right now we are at 51,300 zone. So most of the banking counter are either declining or underperforming the broader market, and the same applies with the Axis Bank. But looking at the price structure, we believe some sort of bottom process could be there. In last couple of weeks, the stock is corrected from 1340 to 1120 marks, and now we clearly see a consolidative breakout of last 30 days with hold of 50 EMA. So looking for some diversified portfolio and bottom facing approach, one can go for long position with support of 1155, and Axis Bank has potential to at least bounce to us 1240 to 1260 zone.
40 to 1260 are the levels on the upside for Axis Bank. But on that note, that was the last stock we discussed on this edition of Market Fatafat. But on that note, Chandan, thank you so much for joining us. Chandan, Ria, as well as Osho, who joined us in the previous segment. That's a wrap on this edition of Market Cafe. Market Fatafat. Closing trades takes all the action forward.
If you like this video, then like, share and subscribe to ET Now.